Hi, I'm Phil Grandy of philsgang.com and Phil's Gang National Radio Show. Well, happy December. Who can believe that? I remember it was July 4th. Seems like 2 seconds ago. But December. Now, I've been telling you all along that this market, they've been rigging it, financially engineering it for this last quarter to rally big time because it's been a bad year. And I've been in this business over 50 years. And one thing that I find every time that the market, or we're in a bad year, when you get in that last quarter, they'll do anything to rally the market because the big investment banks, they want their bonuses. Oh, yeah. I mean, you're talking big bonuses, 3 million, 4 million, 5 million. So they'll do anything in the last quarter. And they were lucky this year because in the last quarter, we have our earnings. So they use that as a springboard. And you know how that works. They always beat the estimate by 1 penny, estimate by 1 penny. So that always gets the market moving. And then the unique thing that was happening is that everybody was dumping this year their bonds. And when you dump your bonds, the yields go up. And that's why the market was coming down. That's why we had a 45, 46-week sell-off. This sell-off started in January. It's been like a slow death, where all the other crashes, you go down 31% in 4.5 weeks or 32% in 11.5 weeks. This one's been 47, 48 weeks, and we're down on the S&P about 27% when we hit the bottom. So it's been a real bad year for the brokerage house and the big investment banks. So they want those bonuses. So the idea is to take the S&P, financially engineer it. Now remember, the S&P has about 8 major tech stocks in it. That's right, about 8, Google, Microsoft, Apple. And they figured all we have to do, keep pushing the S&P up towards the 200-day moving average during this last quarter, especially using earnings season, and everybody will start covering their short positions, especially the big institutions who were shorting the tech stocks. Because remember, the tech stocks get killed when yields are going up. They only do well when yields are going down. So if you notice, they started during earnings season, starting to push up. The people, they started to buy bonds. The big institutions started to buy bonds. If you look on TLT, that's the symbol for the Treasury, you'll see on the chart the TLT kept going up. That turned the yields back down. Now, why were they doing that? Because tech stocks love low yields. So they knew to get the S&P over the 200-day moving average, they needed the tech stocks. And sure enough, if you look yesterday, what drove the S&P over the goal line, the 200-day moving average, it was the tech stocks. 37 million shares in the last 15 minutes. They covered those tech stocks so fast, and that's what pushed the S&P over the line. Now, the big problem is, does it hold? Well, 1450 is what you got to watch, okay? It's got to hold. It's got to hit that 1450 and hold. My guess is they're going to keep pushing this market up. It's going to be volatile, but they'll keep pushing it up, trying to get to that Christmas rally. If that happens, then after January, I say starting February, we're going to see this whole market collapse, okay? Unless inflation is totally gone. Now, yesterday Powell came out and said, well, I'm going to, I may not push the interest rates as hard as I have been because we're starting to see housing inflation come down and we're seeing goods come down and things are better, so I may not push the higher rates. I may have them come in a little bit lower. Maybe I'll do 25 basis points, 50 basis points. And that's when the market took off yesterday. Everybody went nuts. Remember, the last time he said that, the market went up in 2 days 1,500 points. That's not going to happen this time. Went up 1,500 points and gave it all back. So he tried the same thing yesterday. That's how the whole rally started yesterday. And then as we got closer to that 200-day moving average, boy, did the shorts come in and cover their tech stocks. And that's when the 37 million shares traded hands. So that's it. So that's what's going on in the market today. We'll see if there's a follow through. I don't think there will be much of a follow through. But as I always say to my gang members, when the market opens, we lose our opinion so we don't lose our money. And that's the beautiful thing about charting, why I invite you to come to my website for 10 days free. Because charting, you follow the money. You have no opinion if the market's going to go up or down. Why have one? It's the money flow that identifies if the market's going to go up or down. And if you have the skills that when the market goes down to short, and unfortunately, most people don't. 80% of people lose money in the market because they don't know how to short. And when the market stops going up and starts pulling back, or their stock pull back, they jump out of the stock and look for another stock to buy. What are you, nuts? Why would you go look for another stock to buy when your stock is going down? If your stock's going down, short the damn thing. Well, that's what we're going to teach you at Phil's Gang. So take advantage of that 10-day free offer. So that's about it. So I'd say let's see what happens today. But overall, they're going to continue this rally, as I call it, the bonus rally. It's going to be interesting after the new year what's going to happen. My guess, we're going to go back and visit the lows. That's about it.